Welcome back. You're watching Talking Point, and we have with us a very special guest, Vikas Khemani of Carnelian Capital Advisors, joining us. Hi, Vikas. Thank you very much for joining us. Thank you for waiting for us. We're in conversation with the management of Nalco after an extended hiatus that they've been on. So thank you for staying with us. Vikas, how are you feeling about the markets right now? You know, it was only last week I was thinking that with the budget behind us, with the election outcome almost a given, earnings season also now technically behind us, the markets would be lacking triggers and would probably go into some sort of a price or time correction. And of course, then we had Thursday and Friday when the markets rallied up. Do you feel like there is enough reason to buy right now, or is it one of those markets that you stay on the sideline and wait for an opportunistic time?
Thank you very much. First of all, I would request your team to get the name of my firms right. It's Carnelian Asset Management and Advisors. I have corrected them many times. Secondly, I think coming to your point on the markets, I think markets are, we have had many conversations on that. Depends on what your time horizon. I'm quite optimistic about market from medium term to long term perspective. We are seeing a good consolidation in the market. Budget, I think, was anyway not expected to be any major event. Election concerns are behind. So I think corporate earnings seems to be all right. So I think broadly market has no major risk per se. At the same time, I think it will take its time to get the trigger in terms of upside. Yeah, so I think it'll be a slow and steady. But if you're asking my view from a medium term to long term perspective, I think we are in a very, very good positive, bull market. Short term, very hard to predict.
Yeah, sorry, Vikas. I don't know why they've got that name of the company wrong, but we've notified them. I promise you this will not happen again. Talk to me about sectors. And I know when the last time we spoke, you seemed quite optimistic on banks and IT. Now, banks are also seeming out to be a beast in themselves, right? You've got the likes of an HDFC bank that are grossly underperforming for reasons specific to the bank. PSBs have been on a tear, at least in the last couple of weeks. Where is the advantage sitting in your opinion? Value with the likes of an HDFC or opportunity with the PSBs?
I think we've been holding PSBs for last almost close to a year. We think that PSB is a very big re-rating story in making. Most of the PSB are still reasonable valuation, or I would say rather cheaper valuation, given the transformation they are going through. And I think that should continue for some time. Stock specific, always you have to avoid. We have not owned HDFC Bank for some time, and I guess they will have some more time to go before the whole integration related pains get over. But it's a great bank, no doubt about it. So we keep monitoring, but we haven't bought HDFC Bank. So I think banking you have to look at from a structurally long-term perspective that Indian economy cannot go from here to $10 trillion without banking sector doing well. So banking is the sector which will do well. It might have intermittent consolidation. It might have intermittent phases of no return, but that's the part of any sector. Structurally speaking, I'm very, very positive on banking and financial services over next decade.
PSBs, Vikas, are you adding to right now? I did hear you said that you've had a whole lot of them for the last 1 year. So you're, of course, bearing the fruit of it right now. But if somebody had to ask you anything that you're adding, incremental capital to, which ones would those be?
PSB, like I said, that there are three major reasons why we are like, if you see in all the PSBs, earlier there were three problems: technology, asset quality, and governance. Asset quality got sorted out over the last 3-4 years as the provisioning happened and the economic revival has happened. So that's behind us. In fact, you are seeing more recovery from the provisions. Over last many years, they picked up the CEOs for the banks, which are very, very good, capable, and they're driving the transformation in the banks. And lastly, technology. About 8-10 years ago, technology was a build play. Now it is plug and play. So most PSBs have invested significant amount of money into technology. So the differentiation between private and public has narrowed down drastically. So having fixed all these three things, I don't think there's much difference or case given their footprint, given their CASA franchise. They should trade where they are, and I still think that there's a lot more value over next a couple of years. You will see them, trading at 1.5 time book and maybe more. like how SBI was the lead earlier from half-time book to almost close to two-time book. Similarly, that's, other PSB banks also will walk through that journey.
You said you've got HDFC on the watch. You've still not gone out and touched it, but you would be tracking it closely. Now, what are you tracking here? A commentary from the management, a revival in terms of earnings, growth, guidance, or is it a price correction that you're waiting for here?
Not really. I think, SDFC has been going through a lot of, internal shuffles and or integration is also going on. They have to raise, deposits. So there is an overhang of the integration. So we will watch out for that. I think, in my opinion, at least it'll be a year away from where we think, it is not going to happen in a hurry. Not because, it's a great bank, great institution, but from investment point of view, we would like to see a clear trajectory. And I think if you compare, and investing is all about comparing with other alternative options at a similar valuation where you're getting other alternative options like ICICI Bank, when there are no kind of overhangs, it's better to play there. I mean, you might get still, similar returns, but, it has lower risks. So I think it's not against HDFC Bank. It's that we find the similar alternatives, adjusted for risk better. That's the only thing. So we will still be, watching out over the next couple of years.
As you know, with the earnings and with auto, we saw a theme, and the cases for re-rating largely were all about EV, right? It's all about the EV segment. Of course, the Marutis, the Tata Motors, M&M last week. What is your preference here, an electric vehicle or an ancillary?
If there's opportunity in the right all space, I think we own, Tata Motors, which is, as you know, is leading. It's a great play in PV, it's great play in EV, it's a great play in commercial vehicle. So we've been, very, very bullish on that. We've been owning Mahindra and Mahindra, which again is, fairly multi-purpose play, which also has a significant EV play. So I think, from those we've been, owning these, and there are many auto anchors which we've been, which we've been owning, which benefit from this cycle. So the segment is coming after a long in a growth phase for over last 1.5 years. And whenever such kind of turn happens, it typically at least lasts 3 to 5 years, if not more. So I think this uptick in the auto cycle led by the growth in the recovery of economic recovery and increase in the incomes. So auto is the one which will benefit a lot also from the infrastructure development. So, we've been kind of positive on some of the names which I mentioned to you.
Right. Because also, I know you're optimistic and have been on the mid-cap IT pack. Now, again, I think the two broader themes, not just in the markets, but in the economy, have been EV and AI. Now, this AI is still early stages, it's uncharted territory for a lot of these players. Would you bet on the tech companies who have an AI exposure or AI play, or would you be going with, tried and tested large companies who'll figure their way out? I'm a little confused of how one approaches and plays and, takes advantage of this AI rush.
If you ask me, you can't segregate necessarily IT from AI. Incrementally, it's like this. Earlier there was this thing rush to make, businesses with a new tech. But if you see today, every business has to be tech enabled. Same way, every technology services have to be AI enabled. That transition will happen. And in the process, market somehow, gets excited with the buzzwords. Today, I don't think any technology services company can afford to say, I don't have AI capability. It is becoming integrated part of it. Like how digitization and cloud migration was there, say, for example, 8, 9 years ago, right? So you have to look at companies which are able to just adapt to the emerging trends and are able to grow faster than. So in our attempt has always been to buy companies which can grow 20% plus, and which are in high growth areas of that. And like R&D is a very, very, very high growth area within IT services. We've been very bullish, and we've been, we've had many successful investment in that, space. So like this, we keep on looking for those ideas. And I think technology sector per se will do very well. Today, our exports are in and around $220 billion. This number will go to $500 billion over next, 8, 10 years. So sector will grow, and within that, our job is to identify companies which can grow faster, whether it is in AI or R&D.
Because what are your top 3 stocks or sectors that you're incrementally still adding to at this stage?
See, again, you think, I mean, our entire portfolio right now we are adding, because as we get money, we keep buying. So it's not that, I mean, I can't comment 1 or 2 names, etc. But I can tell you, if you're bullish on a market from an 8, 10 years perspective, there's no way you will not buy. You might optimize for one or two, quarter or month or, those kind of things. But structurally speaking, like I said, I find value in banks, including PSUs. Find value in IT services company. I find value in manufacturing. There are many plays, despite such a good run, we find interesting and, investable at this point in time. We find reasonably now incrementally, we've never invested in last 4 years on consumer names, right? Now we're beginning to look at which other consumer names will benefit, while we have not bought anything yet, but we were looking in that names. So opportunities do keep. Power sector we bought, about 2 quarters ago, which has done very well. And I still think there's a lot more value given the structural over next 8-10 years run in the power sector. That's also especially the conventional power sector. So there is a value in the market, to be very frank. I don't think, while there are pockets of over exuberance, overvaluation, for sure, you can't deny on that, but we are able to find ideas within the space which I mentioned to you.
Right. One very quick question. I know you keep getting liquidity into your fund and hence you need to go out and allocate, but you also do have the ability to taking a cash call at times, right? Are you going in staggered with fresh money, or are you, and if you are staggering it, what is the sort of staggering you're doing? And for existing portfolios, have you done any sort of a cash call at this stage?
No, we haven't taken any cash call because we think that market still has a lot of legs to go. But whenever a new money comes in, what we do is we deploy based on idea specific. So out of my 20 stocks in portfolio, let's say there'll be 8-10 stocks which are very convinced we'll buy immediately. Some stocks we'll probably try to wait, optimize for a couple of weeks or so. If suppose, let's say they're not coming down, we'll replace with them the new stocks. So the philosophy we follow is for every stock in our portfolio, we have buy zone, no buy zone, sell zone. So once it moves out of buy zone, then we kind of replace it with some other stock. So our approach, and I can tell you, we are able to find ideas which we are convinced about it. So there's no shortage of ideas where we think that money can be made. But I can tell you, we are not, in a situation where, most of our portfolio is viable right now.
Short of it is the money is still to be made. The markets still trade below their peak valuations. So, of course, you clearly have a good eye for picking up those winners. Vikas, we'd have loved to chat with you longer, but hopefully we'll catch you soon.